You are listening to the Bitcoin, Blockchain, and Crypto Podcast with your host, Alex Merced of alexmerced.com. The following is for education and entertainment purposes only and is not to be taken as investment advice. Learn how you can support this and the many other podcasts of Alex Merced by going to libertydeal.info and find ways to support the show through our sponsors and through cryptocurrency donations. Enjoy the show. Hey everybody, this is Alex Merced and you listen to another episode of the Bitcoin, Blockchain, Crypto Podcast. And this will be the final episode of our series on ETFs and whatnot. So in this episode, we know what ETFs are. We know why people care about a Bitcoin ETF and the effect it can have. The question is, can there be other products to create on Bitcoin? I mean, you already have Bitcoin futures. So Bitcoin futures are a derivative. So when you buy Bitcoin futures and sell Bitcoin futures, you're not directly buying Bitcoin. So it doesn't directly have an effect on the price. Down the road, it can if people don't use their Bitcoin futures or unwind their Bitcoin futures, because then they will be forced to buy and sell amounts of Bitcoin because the contract will come due. But that's the one sort of other product that is available, and that does have an indirect effect. And as people see the futures price, it'll influence their willingness to buy and sell at the current market price. But there are other exchange-traded products, meaning products that trade like a stock, have the benefits of kind of an ETF, but the liquidity of an ETF, but are not. A couple options are, now one thing I think Coinbase is doing is they created an index on cryptocurrencies. So basically they have a basket of cryptocurrencies they keep track of and are creating an index so you can track sort of the cryptocurrency up and down. And I think are also developing sort of a mutual fund to get exposure to the price, which I have a feeling that's why they created the index. And they might be basically using derivatives on the index, meaning things like futures and other types of contracts like that, to be able to capture the value without directly having to worry about the liquidity issue. Because the idea is if you're not having to buy and sell the actual crypto in order to get in and out of your position, then the liquidity issue isn't a problem, because getting out won't mean you're going to sell so much cryptocurrency that you're going to kill the price, or buy so much that you're going to drive up the price into infinity. So creating sort of derivatives on top of that gives people exposure to the price without becoming a huge player in the price, especially for assets with less liquidity. Another way you could do it is something called an exchange-traded note. Now, what an exchange-traded note is essentially is you basically you're buying a bond. You're lending an investment bank money, and then what they'll do is they promise you the growth in the underlying at the time of maturity. So you would put in $1,000 for, let's say, 5 years. So let's say this was a Bitcoin exchange ETN. They would track the price of Bitcoin on a particular exchange. It would all be in the contract. And at the end of the 5 years, you would get your $1,000 back plus any the percentage return on Bitcoin over those 5 years as an increase, as an additional revenue at that payment. And in the meantime, it would trade like a stock and people could trade that ETN. That's a possibility, and you could do that not just on the underlying Bitcoin, but you could create an ETN on the index, like the one that Coinbase made. Another possibility, this is a much more speculative and dangerous product, but something called the reverse convertible note. This would be something where, again, you make a loan to an investment bank, you pay $1,000, but essentially on the maturity date, let's say the underlying, we'll say Bitcoin, isn't at a certain price. If it's at a certain price, you get your $1,000 back plus interest you collected in the previous years. So it would be an income generating asset. You might get, let's say, 5% income every year. So you're not going to be making a whole lot of money. But if you're looking to generate income, why would you want to generate income off Bitcoin is a good question. I'm not sure if that's the right asset to do that with. But then if the price of Bitcoin is below that set price, called the knock-in price, then you would be given the Bitcoin, which generally means it's going to be worth less than your original $1,000, and you would lose money. That's one avenue. That's probably not the best avenue, since it doesn't really give you the upside of Bitcoin. It only gives you the downside. That's much better used for more stable assets that probably have a future of appreciation for investors who are seeking income, which generally people looking for exposure to the crypto market are not. And so I would imagine that the ETN may be a possible route, although that has the opposite. It doesn't give you the risk, it puts the risk on the investment bank, and I can't imagine many investment banks want to take the downside risk, actually the upside risk, because again, the better Bitcoin does, the more they're going to have to pay out to you. So they have to somehow generate a higher return on that money while they borrow it from you. That could be quite risky for the investment bank. So that's probably the reason why you don't see those products in existence and why everyone's focusing on the ETF. Because the ETF doesn't really, it basically keeps the upside and the downside in the hands of the investor and away from the investment bank, and doesn't split it up in any kind of weird way. But again, the big issue is there liquidity in Bitcoin to be able to provide investors all that. And just a little side note, as we've talked about this, I am currently not a licensed financial professional. I've had licenses in the past, but I don't currently. I'm not in the business of giving investment advice. So anything I talk here is mainly for educational purposes and entertainment purposes. So don't take anything I say as, hey, go do this. Because things can go up and things can go down. I mean, the price of cryptocurrency particularly is quite speculative, and not something that anyone should just do without really kind of consulting somebody who knows what they're doing, and ideally a licensed professional who kind of understands all the different risks that you take on when you take on investments. But if you enjoy what you've been listening to, head over to bitcoinblockchaincrypto.com to see the videos I have to kind of help you get from zero to hero regarding Bitcoin knowledge, Bitcoin, blockchain, crypto knowledge, or refer your friends there so that way they can learn. Also, if you like what I'm doing, please do contribute so that way I can spend more time doing more episodes and doing more research to bring you guys more information. And you can do that by going to patreon.com/AlexMerced. That's patreon.com/AlexMerced. You guys have a great day. I'll see you guys next week.